Last week, the Wall Street Journal warned China could be approaching a, quote, Lehman moment as their financial markets implode, referring, of course, to the collapse of Lehman Brothers that set off the 2008 financial crisis. Meanwhile, Nomura Securities, one of Japan's biggest analysts, just cut China's GDP growth again, calling it a, quote, downward spiral. This follows recent GDP cuts of China by Morgan Stanley and JP Morgan. Last week, I did a video on China's mounting problems, how over half the Chinese economy is now in distress as manufacturing flatlines and home builders collapse. Note, manufacturing is a quarter of the Chinese economy, about twice what it is in the US, while China's home builders actually make up over a quarter of GDP, which is multiples of what they are in the US. Those Chinese home builders are now carrying over $5 trillion in debt, which is so much there's no way China has enough to bail them out. They are too big to bail out. The Lehman in question for the journal is Zhongran International Trust, which the journal describes as a, quote, seller of esoteric financial products with $108 billion under management, parked in a black box promising, quote, annual returns up to 15%. Which sounds fairly Ponzi schemey. In fact, Zhongran's Miracle Box just missed 4 debt payments, and Chinese social media users are saying they cannot get their money out. By the way, under Chinese law, those customers are out of luck. Right behind Zhongran awaits a $1 trillion rogues gallery. Evergrande, one of China's biggest home builders with $340 billion in debt, just filed for Chapter 15 restructuring in New York. Country Garden, another major home builder with hundreds of billions in debt, is right behind, having just missed debt payments and suspended trading on some of its bonds. In response to the spreading financial wildfire, in recent days, the Chinese government hit the big red panic button. They ordered investment funds to stop selling Chinese stocks, and they ordered major banks to buy the yuan, China's currency, to prop it up after it plunged 5% in a matter of weeks. Chinese stocks have dropped over 10%, also in a matter of weeks. In fact, the Hang Seng Index is now lower than it was in October of 2006. So forget the lost decade, China has lost 15 years. So what is next? The Chinese government lies about statistics, yes, even worse than ours, and non-government analysts are saying things are much worse than the government admits. The Wall Street Journal estimates the property slump could be 3 times worse. In some cities, properties are now falling 20 to 30%. More broadly, the Chinese government is one by one pausing the reporting of economic statistics. Most ominously, the youth unemployment rate, which in the middle of a manufacturing collapse hit a record 21.3% before the statistics went dark. As one analyst put it, Chinese statistics aim to hide bad news, but when people start worrying, quote, the data defeats its own purpose, as in regular Chinese are now assuming the worst and responding accordingly. In the near term, expect the Chinese economy to keep spiraling, defaults to keep mounting, and the Chinese government to keep lying, even as it pounds the panic buttons and makes the data go dark. Last week, I mentioned China could be headed for a Japan-style lost decade of slow growth. Those odds just went up. Okay, we'll be watching. See you next time.